Welcome back to the channel, guys, your home of macro cycle analysis. Today, we're dialing in the scopes to altcoin season, looking out for signals as to when this thing will blow up. Now, there are signs that it has already begun, but you'll never know that until after the fact. But what we can do is identify key patterns that tend to lead to these big altcoin pumps. If you love the sound of that, and of course, learning about the financial markets across the stock markets, Bitcoin, cryptos, and the real estate cycle, you're going to love today's video. Make sure you hit that like button, subscribe to the channel if you're new. It's the home of macro cycle analysis with me, Jason Pizzino. Been trading and investing for over 18 years in real estate, came across into commodities, and found myself in Bitcoin and cryptos back in 2017. So without further ado, let's have a look at the agenda for today, looking at this when altcoin season. But of course, I will cover everything here on the channel. I'm not a degenerate channel that just looks for these meme coins and then you get wrecked. So we want to do this so we can do it long term as well. First up, the financial markets, S&P 500s, commodities, NASDAQs, looking at the sentiment. Then we'll get into some Bitcoin and then altcoins. I've also got a little sneaky one here for XRP. So stay tuned. First up, data points here for the stock markets. There might be a little bit of a slowing here. However, it will unlikely affect the market overall. What we're seeing are some signs that new highs have whipsawed from 52-week highs in stocks down to, in some cases, no new 52-week highs. Essentially, if you got 500 stocks in the S&P 500, a lot of them were at new highs, and then it's whipsawed now down to either a few or zero. When this has happened before, basically S&P 500 after the New York Stock Exchange, net new percentage cycles from greater than 10% to less than zero in less than a week. So basically swinging pretty heavily. The results were mixed, is what they're saying here. You can see some pretty poor results 1-2 weeks later and a month later. Basically, when this signal happens, the stocks have tended to pull back. I don't think that's going to be an issue longer term, as you may have found out with some of the other analysis on the channel. But nonetheless, I think it's important to point out, especially as we lead into this exciting altcoin season time. The next thing here is the risk off composite model triggered a new alert, essentially saying to get out of riskier trades. This is for the stock market, looking at the breadth composition, suggesting dwindling participation. In the past, or at least in the recent past for the stock market, it hasn't been an issue for the S&P 500 and for the NASDAQ. Some of you may recall, if you've now been trading the markets for a couple of years, or at least watching and learning from the analysis and putting your own analysis into play, is that there was this similar signal back at the lows where the majority of people were worried that there weren't many stocks pushing the stock market higher. So essentially the breadth was very low. You had the top 7 tech stocks pushing the market higher. You had the bottom 493 other stocks that weren't really finding highs yet. Well, what happened? We know now from history that the stock market really did run higher. So in the short term, some of these signals could be a downside move here for the stock market. But longer term, we're still seeing higher prices based on the other macro data points that we've covered here on the channel day after day after day, which is typically why I suggest subscribing to the channel so that you can see the analysis, essentially like the news from the charts coming together, and you can get a clearer picture rather than jumping from point to point and different models and all sorts of things. So the S&P 500, nothing really to be concerned about in the longer term. Short term, sure, it's had a nearly 3% pullback. And as we covered yesterday, plenty of support to the downside, 5% from the high, 7% from the high, and then back to these lows here around 10%. Okay. NASDAQ is also slightly weaker here underneath those previous tops and previous resistance levels now potentially, or support levels now potentially becoming resistance here to the downside. 19,300, still a pretty strong level should it get that far. But you've also got a nice round number here at around 20,000 for the NASDAQ. So short term, some weakness. Longer term, still some strength. There's still higher lows forming, higher highs forming on the macro charts here. You can jump up to the monthlies. Plenty of strength going on at the moment. This one is the Dow Jones, a little bit of a pullback here. Level is still at 41,600, so we're still seeing strength there. Essentially, I'm trying to put together the picture so that we can see the health of the traditional markets, and of course then you can go degenerate and put your money into any other altcoins that you feel like you think you're going to get rich from, right? The Russell 2000 here has also had a pullback, nearly got to a new all-time high, lagging the rest of the indexes, of course. So this is the smallest 2000 stocks in the US. The 50% levels back at 2,200 points, and the VIX is still in pretty good order here, back in our bull market support zone. This is something that I coined a couple of years back, as many analysts were worried when the VIX dropped, it was getting ready to pump, which would mean that you would see a dump in the S&P 500. That did not happen, and therefore they, I guess, need to reassess how they read the VIX. How I'm reading the VIX is in this level, this zone 11 to 17 is a good thing for the stock market. You can see longer term here. Eventually the tides tip, but that isn't the story at the moment. So we've looked at the S&P. The market sentiment actually is back to neutral. Yesterday was also neutral, and we're just sort of cooling off from a bit of a greed time there. Several days there in greed. So again, market sentiment seems to be resetting, which is essentially what you want to see in the markets for that longer term sustained bull market. So we're getting the VIX pulling back, the volatility is dropping. We're seeing a pullback for the market sentiment. So that's a good sign as well. As for the commodities, let's have a look. Aussie market, just a quick one for the Aussies, nearly at a new all-time high. I thought that was pretty interesting considering the US market is actually having a pullback. The Aussie market wants to head up and nearly crack a new all-time high. So probably things like banking and mining are doing relatively well, which leads me over to commodities like the US dollar has had a pullback the last couple of days from that resistance level at 107. So as I looked at in yesterday's video, this has been a very strong move, something that I wasn't anticipating in terms of the strength for the US dollar. However, you'll note our TIA 3-day rule called the low again. Now, we looked at this on the channel in real time. I'm not doing this in hindsight. You can go back to the videos around the 30. You need to be on the 3rd of October or around this period, because that signal shows up on this day here on the 3rd. You got 1, 2, 3 days up, and that was confirmed on that day there on the 3rd of October. So that signal says that it's likely going to be a pretty strong turn in the opposite direction. The trend was down, and now it's reversed to the upside. Wait and see whether we get a breakout of 107 here. How are the rest of the commodities doing? Oil had a bounce. US dollar went down yesterday. I mean, that's only a 1-day correlation here. Gold also same sort of thing. It's had a bounce. US dollar was down for a day, but note where it bounced from. The 50% level, 2,553 US dollars. So we can use any of these lows here. Primarily, I'd be using this low, and you can see it right on the money there, right at the dollar. The silver has also had a slight bounce just above the 50% level. And for now, that's where I'll leave the commodities. So things are still tracking along as they should. And that leads us now to Bitcoin and the exchange volume. But before we do, quick one, the free crypto and economic report is coming out today. Make sure you've subscribed. Link is in the top of the video description. And you'll also be notified when the Black Friday sale goes live next week. I can't believe it. Black Friday's out next week. So you'll get this copy of the report looking at Bitcoin, real estate, the economy, and a altcoin trading pick in there. So check that out. All right, over to the daily exchange now. Just a slight pullback yesterday, but still at very elevated levels at around 120 billion. Yesterday's video, we were watching how this was at the highs of 2021. And what happened in the previous cycle, as it broke through those highs, it basically went absolutely bonkers, parabolic, right? Those highs were around, sort of 10 to just over $20 billion. And then it eventually got all the way up to about 170, 180 billion at those peaks. So you could look at something like, 8, 9 times the trading volume. I don't know if you're going to get 8 to 9 times the trading volume this time round, but even if you got half from that breakout point, so 4 times at about 180, you're looking at around $700 billion if you get that far. So look, even if it was a doubling of this top, it's still a lot of money still to come into the system and be traded on a daily basis. So just conservative and then cutting it back to be conservative again, just in case you still have a very positive result, I guess, or a potential positive outcome from how much money seems to be ready or getting ready to pile into the market to try and make their fortunes. And as a reminder, the bull market has been on since November 2022 for Bitcoin. Okay, so for that cycle, it's November 2022. If you're getting in now, that is your starting point. So 2 years. We've been going for 2 years. This is not the beginning of a super cycle. It's not the beginning of an S curve. It's not the beginning of something that will never go down. I mean, I've been in it since 2017 and I heard it from the guys who are in from 2013. It's the same thing every single cycle. There'll be some reason to say that the market's not going down this time because something is different. Something is different with the US dollar. Something is different with the presidency. Something is different with Trump and Elon Musk. Elon Musk is doing something different. AI is doing something different. There's so many things that are going to suggest that things are going to be different, but that's the point of markets. Something seems to be different each cycle in order to get more people, new people in. So hopefully that can save you or at least protect some of your profits as the market runs up. And the point I'm making in terms of the timing of the cycle, it started 2 years ago, okay? So that's the starting point. Eventually things run out, no matter how many new things they keep throwing at us. There's only so much money at that point. They can keep printing money, people will keep throwing it in, and then eventually the smart money starts to pull it out. I like to throw a little bit of that wisdom, or at least what I think is wisdom, at you guys. Hopefully it's helpful for you. I've seen it now for 18 years. I got sucked into it when I was 20, getting into my first properties. It was the same sort of thing. People really did believe that real estate could not go down, and it did at that time. And of course it's up now, but you've got to hold on for like 15 years, 20 years to get to that next cycle peak. In some cases 10 years, but the point is, when everyone thinks one thing, it's usually the opposite. And I don't think we're at that point yet where everyone's thinking that there is only upside and never downside. We're at a point where a lot of people are thinking there is upside, but a lot of us are still cautious that there can be downside. So we need to, the market, I believe, needs to get to a point where the sentiment flips to it's not possible for it to go down. I think you would agree that it is still possible for it to go down, even if you are macro bullish like myself. So that's the exchange volume. In terms of the search volume here, Bitcoin's search volume over the last day has just dropped off slightly. Even though we had that slight update, what we've seen happen at each of these peaks is basically a peak or a pause in the Bitcoin price. So Bitcoin's price runs up. For an example here, you've got 29th of October and there's the 30th. You've got the 6th of November and then 11, 12, 13 of November. So if I drop it onto the daily chart here, 11, 12, 13, there's 11, 12, 13. And the price has really stagnated here. Everyone gets interested on these big moves. They're like, why aren't I in on this? Well, they forgot about it 2 years ago and just said it wasn't going to happen. And now they're all searching for Bitcoin again. As the price slows down, less search volume, of course. I guess that's only natural human behavior. The ETF flows has also, it peaks with the search volume. So here is the ETF again. That was the 7th, the highest days, and then the 11th, there it is, 12th and 13th. And now we've found ourselves with a couple of negative flows at this peak here. So basically on these couple of days coming up. In terms of the fear and greed, back at 90, even though Bitcoin had a push up and then basically a lower close, it is the third highest close in history. So that greed is still sticking around. So as I said, everything is still pointing in the direction of further upside, but you typically get a bit of cooling off at times. And if you get cooling off in this grinding effect, you can see what happens next. If it's able to maintain at these prices, you typically get another burst to the upside. Now, of course, don't go crazy, because sometimes when you get closer to the end of the move, and this move has been going since August 5th, that was the Japanese yen carry trade crash. People called for another recession there, if you remember. August of this year, They were calling for recession again because of Japanese carry trade unwinding, and that was going to affect the stock market. And they gave us some other bullshit reason as to why the market should collapse. It didn't. And now we find ourselves 3 months later, or 100 days, even longer than 3 months, in an uptrend. Higher lows, higher highs forming. So something to be aware of in terms of the timing of this particular move. Starts off slow and gets faster towards the end. Pause, and then potential to go again because the market sentiment resets. In terms of the fear and greed, just a look here on the TIA Crypto Fear and Greed Index against the price chart. We're again at an equal high. I said yesterday it was an all-time high, but it's an equal high at 90. So we've got a 90 reading, another 90 a couple of days ago, 88, and the last time we had that was at the peak back in March 2024. So we're definitely up there. In terms of the timing, just as a quick reminder so that you can see with the timing, this extreme greed can last for a couple of months in a row. Take a look at the exact period 4 years ago. Here is November through to roughly mid-January. So that is two and a half months in extreme greed. There are still pullbacks, somewhere between 10 and 15%. Sorry, just getting my voice back. And then the 30% drop happens and the fear and greed drops back into, well, drops into fear. Quickly bounces back, but then you get a shorter period in the extreme greed here. So that extreme greed lasted for roughly a month. Something to note as we continue forward through this first pump phase of the cycle. Neither is good nor bad. You just got to be aware of the timing, and if it is able to hold and pull back, well, then we could potentially see another upside from there. Liquidations have also been relatively good. We're seeing healthy liquidations to sustain the move. What I don't like to see is no liquidations because that usually leads to bigger pullbacks later on. But for now, everything is still tracking nicely. And that now leads us to the BTC analysis on the charts. This is one of the warning charts that I gave you guys weeks ago, back at around October, early October. We may have been leading to it in around September, just looking at those higher lows and then what results, what comes from the market next. I've got a video back here on October, but I was also pointing it out on X through here. So basically just looking at the movement out of these accumulation zones. Basically exactly the same sort of lows came up. The lows were formed, lower low, and then you got into these higher lows. And basically it ran up, I believe it was 200% from the low to the high. Should we get another 200%, well, that would then take Bitcoin to around 150K. I'm not betting the house on 150K from this point. I gave you guys a couple of price targets in yesterday's video at around $122,000. That would lead us to around 150%, so slightly less than the previous move, but more in terms of dollars. You got another $73,000 move from that low, and the previous move there to the top was around a $49,000 move. So in terms of dollars, more. In terms of percentages, less. But that's part of the game as the market caps continue to get larger. On top of that, November is also a fantastic month for gains. We're at 29% gain so far. It's a 66% hit rate for a positive month. We're just past halfway. But if I take out the bearish year, so 2022, 2018, and 2014, that really bumps up the percentages here to 3 out of 4 years. November is bullish. I was going to say bearish, but yeah, bullish. So 3 out of 4 times Bitcoin is bullish in the month of November. As we lead into December, drops off only slightly here at 72, 73%. In terms of a price in US dollars, just for the Aussies quickly, looking at $140,000, and Solana 368, ETH 4,800, and the beloved XRP $1.75, along with Doge 57 cents, and ADA at $1.13. Okay, so massive signal here, the altcoin pump or tipping point. We've got those on the charts with the total cryptocurrency market cap, but a big one comes in with the USDT dominance. I've been following this on the channel now for a long time, and since the 11th of November, so just going back last week, we've seen support come in on the long-term diagonal. So if we just drag this back through the entire history of the USDT dominance, you can see that this point typically holds the market up and has shown each previous all-time high and Bitcoin, you could call it a local top or a very significant top. So times when Bitcoin basically peaked and held that price for probably months, right? And we're at that point again. However, this time we are forming lower highs on the macro, and this isn't bouncing from this point. We're not seeing any strong bounces, which would suggest sooner rather than later, probably days to weeks, we could see a breakdown here, which would then send money flying, USDT, flying back into altcoins and to Bitcoin. Now, one quick disclaimer on that is the next support level at about 3.8%. So we're sitting at 4.2%. There's about 0.4% of USDT in terms of the dominance. Someone can do the maths for me there. How many billions of dollars or millions of dollars would that be? That could be potentially flying back into cryptos, and then you got to factor on that multiple. You know, $1 million out is not only $1 million into crypto, it's usually like a 10 or a 20x depending on whose data you've looked at. So $1 million could move markets $20 million worth of market cap. So yeah, basically 4.2%, 3.8% is the next support level. And you can see back here in 2022 as well, April 2022, that was a monthly swing top that then crashed Bitcoin and cryptos as well. That's what led to these next lows. So very important levels right now, especially for the USDT. Can it break down and can it keep going? That's the big question that we are waiting to be answered. It seems like it's inevitable. Timing is the big thing right now. I think it's sooner rather than later, just based on where these charts are at the moment. You can see the total crypto market cap at new all-time highs. Unless this gets a pullback back to around $2.6, $2.7 trillion, this would probably get going to the upside. We've looked at timing here, somewhere out to probably Q1 could be the next major correction. But in terms of the pattern in between, you're definitely going to see some sort of short-term pullbacks. But the bigger move could be in Q1. The total cryptocurrency market cap, excluding Bitcoin, ETH, and stablecoin, so the true altcoin market cap as Michael looks at it. Go follow his channel. Link is in the video description down here, Michael Pizzino. We're looking at the tipping point here at $650 billion. So I have excluded the stable coins as well. If you include the stable coins, it's somewhere up around 800 billion. But again, it's a very similar pattern here, but we're not at all-time highs. So if this is able to break out to get back to those next tops, about a 30% move, this is for the altcoin market cap. Doesn't mean your altcoin's only going to do 30%. Some of them could do a lot more and others less. To that top, to the next all-time high, well, the only all-time high there is at around a 50% move for the altcoin market cap. Now, there's still plenty of time to go until the end of the year, and this point, or this timing point I had, was similar to the last cycle, basically looking at times after the election. So we're approximately here, and last time we broke out, we paused for a few weeks. Are we going to see that again? Of course, that's up to the market. I just want to keep checking to see the health of this move. Is this move healthy? Healthy means it has to be remaining above 640, 650 billion because they were the previous rejection points. If it remains above these levels, healthy. If it gets rejected again and falls under, unhealthy, weak, and we would unlikely see that big move to the upside. It seems like it's on the path to do that, to move to the upside and be in a healthy position. Speaking of which, now we're going to look at altcoins. What's healthy? What's not? We have the altcoin market caps and ETH, Sol, Sui, XRP. So ETH, it's healthy but unhealthy. It's not back to the $4,000 top, nor the 39-ish hundred top, nor the 3,600 top, and it's still under 3,450% level. So I know I give crap to XRP at times, but I'm an ETH holder. This thing is definitely not doing as well. So the important part here, besides trading into stronger coins, is to not get emotionally attached to them. If someone says the chart is weak, the chart's damn weak. That's all there is to it. And I know people get a little bit attached to their communities and they get a little bit obsessed with it, but it's just about the chart. I honestly don't care about the ETH community. I don't have anything to do with ETH in general besides holding the thing to see higher prices. Maybe you do. Maybe you're using it for your own benefit. I don't know. But at the end of the day, I'm trading, and I think you are as well, which is why you're here, and you're not necessarily interested in getting involved in these particular communities. Not that there's anything wrong with getting involved in a community, but to me, I've got plenty of things to do in the real world than get involved in online communities. If you're working in it and you've got, you're getting paid from it, different story. So back to the chart and less of the rant. 50% is the big level here that ETH needs to get above, $3,400. So until that happens, you're basically just waiting out the consolidation here. Now, the underside level, if I can get my cursor here, that's that line there, 2850, because you got several tops here at about 2750. You got the lows here as well, which it was able to break through. So on the positive side, to the strength, to the upside, it has been able to break above that level and now hold for 2 weeks. So a third week is going to be fantastic, and I would think we would then get past the $3,400 level. The thing that's holding it down is, of course, the ETH BTC pairing, but we're getting close to where the previous lows had come in previous cycles. So for now, probably a week or two away from that, and ideally, you want to see this thing springboard, get a bit of a bounce going on, consolidate, and then keep going. One thing to note, it was only about 20 weeks that ETH did last cycle from basically the higher low, a significant higher low here in December of 2020 to that first significant peak in May. So roughly about 5 months of gains with a correction in the middle. If that is to occur, and we're going to see a low over the next 1 or 2 weeks, 5 months from this point, basically takes you out to about April of 2025. If ETH is unable to get past the 50% level here, it is not going to do very, very well this cycle. And if it's not able to get past this 50% at 8%, 8.5%, it's probably unlikely going to do very well over the coming cycles. It really needs to break above those 50% levels. And when I say not doing well, it's unlikely to do well against Bitcoin. It'll have its moments for a short period where it outperforms Bitcoin, and you're better off to have ETH instead of Bitcoin for that period because you're going to get bigger gains. But when you look at it in terms of a percentage, 5 months, you could add another month in here of moves versus 4 years, 5 years from basically downtrends and then nothing. So when you do a percentage, say 6 months into 5 years, quick maths for me, I don't know, it's less than 20% of the time that ETH is a worthwhile hold based purely on the facts from the charts, unemotionally. And I bring that up and make a very, very stressed point because that is the same deal with XRP. Now, I put a post out to see how long people have been holding this thing for. It's only been up a couple of hours. A lot of people have been holding this for more than 7 years, 6 to 7 years. And when you look at it, the stats here, the last 2017 to 2022, that 5-year period, 3 out of 4 people have been holding it through that period. Therefore, it is an absolute terrible investment for that. However, if you're one of the lucky ones in sort of not even 2023 was a great time, but 2024, X only gives me 4 options. So you know the deal. If you basically bought it a few days ago or at these other lows here in April, June, May, June, then you're up against BTC. Otherwise, it's a terrible investment versus Bitcoin for the long haul. You got a few really, really fantastic months, and you didn't even get that last cycle. Yes, the SEC got involved. Maybe it's able to do it this time and have a big move. But the point here is that you're taking a huge risk for a possibility of some good returns. And I don't know. I mean, I'm not betting on the fact that XRP is going to do 2017 type moves. You might be, but when you look at the Bitcoin chart, Bitcoin's basically been up and XRP has been down against BTC. This essentially means that it's not doing the same returns that Bitcoin is doing. That's it. So it depends what you're here for. Are you here for a cult community or are you here for returns? Short term, different story. It's done 70% in a week, right? Trading, awesome. long-term hold, the chart just says it's not a great move. 68% down on Bitcoin since the last cycle, 68% down from Bitcoin. I mean, you're losing out to Bitcoin. It's not a great story there, but maybe this cycle it gets back up to those highs and you can break even against your Bitcoin holdings. That would be a really, really good start to do. Now, if that is the case, you're looking first at a level of 1,500 Satoshis and then 2,500 Satoshis. If XRP can't break those tops here at 25 to about 3,000 Satoshis and gets rejected, probably likely further downside and eventually will break those lows. If it can break above that, then you can start looking towards some bigger levels here. 4,000 Satoshis, 42, 4,300, and then maybe you can get super excited and see if it could hit 10,000 or 11,000 Satoshis. But it's got a long, long way to go before it's able to get to that point. Now, I know a lot of people only look at it in US dollar value. That's okay too, but ideally you want to be beating Bitcoin's returns. And that goes for every other altcoin. So I'll quickly look at the other two, Solana and Sui. But yeah, basically here against BTC and USD, you can see a solid breakout of 70 cents. Tables have turned, it's broken those tops there at 76, and it's broken that top there in July, and the double top here in February. So double top break, another double top break, and also there was a 50% level right through the middle here. So a lot of strength in terms of USD value. So if you're a short-term trader, not a long-term cult hodler, a short-term trader, you're going to do fantastic. You got some good trades happening. If you're a cult holder, try to remove that emotion and hopefully make some profits from this thing through this cycle. Speaking of which, here is Solana. Cult, I don't know, you tell me. You've got a nice break to the upside, break at the top. So you can see when this thing breaks out of key levels, and it's a signal overall. You can see it happen to XRP. It's not just exclusive to Solana. When a market can break through key levels, I'm looking here at those tops and then these tops, typically it's got further to go from that point. Solana has done the same thing and it's been putting in very, very solid returns. Sol BTC is attempting to close above that 50% level, which could be news for a new all-time high Sol versus BTC. We're not there yet, but it could happen because of the current position and the holding here with increased volume above these levels and higher lows. So that's a reasonably strong sign for now. Ideally, now that this 26 is being held, got to get above the 30 there, 0.0030. And lastly, Sui USD, well, not much in the last 24 hours. It's still holding out here at around 370. I know people are sort of potentially waiting for a big pullback. Don't be so sure of significant pullbacks to anything in here. I doubt that, only because if it was to pull back into these levels, you'd be looking at a much weaker crypto. You don't want to see the crypto go back to previous levels because that means that people, or the holders there, don't have a belief in it anymore and they're going to just dump the coin, right? Small pullbacks are okay at this stage, but large pullbacks, not ideal. That's Sui. Make sure you hit that subscribe button, like the content as well, and the free crypto and economic report is coming out today. So subscribe to that, and I'll see you guys back here at the next video. All is looking relatively good. You can see a lot of pretty strong moves to the upside, but yeah, just be wary of those coins that look like they're doing good for now and not to get too sucked into those cults. See you guys at the next video or on X and Instagram for a Q&A. Peace out.